Hi, this is Matt Lockridge from Westwood with a fourth quarter 2019 equity update. It was a strong end to a strong year with the S&P 500 up 9% in the fourth quarter. We had the Russell 2000 up close to 10% and the Russell Midcap Index up 7%. And when you take a step back and look at the broad year, really most indices were up over 25%. The S&P 500 was up over 30%. And this strength was very broad-based. We had all 11 sectors up for the year. And when you look at the fourth quarter specifically, we saw technology, healthcare, financials lead the market, and some of the defensive areas like staples, utilities, and REITs lag. So what drove the strength in 2019? To us, there were three main drivers. First, there were easing of tensions with China. We got notice of a phase one trade deal, and so the overarching risk to future economic impact was essentially removed. The US and China are the two largest components of global GDP, and so with this risk off the table, sentiment improved dramatically. Secondly, there were certain leading economic indicators that improved in the fourth quarter. First, the market PMI index bottomed and started to rally. Secondly, the yield curve started to steepen. We talked about this previously, that an inversion of the yield curve was a real risk in the market, and so we saw that improve during the quarter. And lastly, commodities like copper began to rally. So again, another leading economic indicator of future growth. And then also the Fed, as we talked about before, made an important pivot early in 2019 to more of a dovish stance. They lowered interest rates during the year, and this really kept a lid on longer term interest rates. And this more accommodative stance continues to be very supportive of equities. So as we move into 2020, two key areas of emphasis for us. First, last year, equity saw significant multiple expansion due to some of the issues I referenced earlier. We wouldn't count on that type of multiple expansion again in 2020. So we really want to focus on those businesses that have growing earnings and free cash flow streams. We think that's what's going to drive shares higher this year. Secondly, we saw consistent, steady outperformance of growth stocks over value stocks. This is leading to a larger than normal valuation gap between the two areas of the market. And we continue to find very attractive opportunities to deploy capital into the value space. And we think investors will be well served to increase their allocation of value as we move into 2020, as we expect this valuation gap to close over time. So that's it for the update. Thank you very much for your interest in Westwood, and thank you for listening.